Guys, welcome back to my channel, and this is the trade breakdown for Wednesday, Thursday, and today, Friday. Guys, the market was a bit tough from Wednesday. Today, I almost blew the account, guys, from being up 1,000, I think, let's say 1,900, guys. Only up $587 today. Wednesday, I overtraded. I took about 5 trades Wednesday. They were all losses, and it could have been avoided because my maximum trade, according to my trading plan, should be about 2 trades. So guys, I'm going to break down these losses for you guys on the God did model. So on Wednesday, the 23rd, came into the market 7 o'clock. So that price traded up, made this high, made these relative equal lows right here, made these relative equal lows. So that price push up and traded through here with displacement. So that is where I took 9 contracts with my stops above here, and targeting a 1 to 2 risk reward. Went in profit for a bit, played around for a bit, and then price finally took me out about here. So the trade was relative equal lows made, high was taken, displacement through these relative equal lows, back into the fair value gap, entry, price reverse and played around. But guys, I realized this was going to be a loss because when I saw this push down, then price pushed up into this fair value gap, pushed down, took out these lows, and closed back above these highs and this fair value gap. This would have been uh, entry model for me because these lows was taken. But because I saw that this low was made and a fair value gap was made when these lows was taken, I held on to the trade according to my plan that I wanted to, keep my stops. Either TP get hit or stop loss get hit. And I left it. It went into drawdown, then went into profit here. And then I saw these relative equal lows made. That was the next telltale sign that price wanted to come down here to take out these lows, and I saw that it was moving away. But then it came, it stopped me out. Then when I saw that it stopped me out, realizing that price wanted to go up since it did this here, and it displaced through these highs and gave me this fair value gap. When I saw price coming down, I think I took 10 contracts here again to continue up. A price then push up here, came back down, made these relative equal highs, and then started pushing down and took me out. When I saw that price took out these lows and price came up here, I took a next. No, it was a long. Here was a long. So that price took out this low here, this relative equal low, with this fair value gap in here, and price closed above here. I was looking for next long to continue up to take out these relative equal highs, guys, and then price reversed and came back down, took me out here. At this point, guys, these 2 losses, I would have been about down $500. I should have stopped trading from here, but I continued. When price took me out here, I continued at market open. I think I tried for longs, knowing that these relative equal highs was created up here. I tried for longs in here, and it took me out because my stop was, I think, around here. Push up a little and then came back, took me out on this candle. So that's 1, 2, 3, 4 trades. So I was down 1,000, I think roughly $1,100 from Wednesday. My confidence was down because, guys, after being up 1,800 to see that your balance went down minus 100 at minus $1,000 plus stop step has a trailing balance, so you know that you do not have $1,000 $2,000 to work with anymore. So let's go to first day's trade. First day's trade, guys, it could have been a win for me, but I was away from the market. I was on my way to work. So when I came into the chat on Thursday, guys, I let me see if I remember this trade on Thursday. That was yesterday. Yes, so these relative equal lows was made. Price pushed up, made this, and then came back up, made this, and made this relative equal lows. So that price came down here, make these relative equal lows here. Don't know if you guys are seeing these lows here. Came down, made these relative equal lows, push up back, came down, took out these relative equal lows with this inverted fair value gap right here, and then push up above this inverted fair value gap. When price push above this inverted fair value gap, I took my entry here on this inverted fair value gap. I didn't wait for the market structure shift, which was supposed to be up here. I placed my stops below here. When I took the trade, guys, I left the trade with my stop loss in place, and I went to work. This would have been a 1 to 3, but guys, I think that my stop was 6 points. So guys, I was supposed to take out about 18 minis contract because my stop was only 6 points. I normally risk $250 per trade. This trade was risking about 150, close to 200, maybe $180 per trade. So I forgot that I didn't risk the maximum amount I risked for my trade. So when I left this trade and went to work. And I came, price was reversing, price was somewhere around here. And I was up about 300 and something. But I was looking for the 1 to 2, which was a normal $500. And I forgot that I didn't risk the maximum amount. When I saw price was reversing, I placed my stop at BE here, and price came and took me out on this candle at break even. If I had risked my normal amount, I would have been up enough where I could have closed partial when I reached at work somewhere around here with at least at least $300 in profit, because as you can see, this ran for 1 to 3.4 before reversing, but when I came to work, it was somewhere around that area on this candle there when I saw price was reversing. So when I saw price was reversing, took note at BE, thought that price wanted to come back to retest this and this breaker here also, because we have this high, low, or you could say you have this low, high, lower low, and move away from that. So when price came back here and then make this high, then came back down and displaced through it with leaving this fair value gap, I took a next entry here. Price moving to profit a bit, then came back out, came back down, took me out, and then I think, yes, it was news on news candle. There was a news candle. So on this news candle, price took me out, and then I took, what did I take here? I think I took buys again. I took an impulsive buy on this order block to take out these relative equal highs, and price came back down, took me out. So this was one break even, two losses. Did I take any more? So this should have been a win, and if I had gotten a win, guys, I wouldn't have traded anymore for the day. So this could have been a win if I had taken my normal risk, or if I had just closed out the trade when I reached at work. So let's go to today, Friday. Today, Friday, the market just went up and up and up today on today, Friday. So when I came into the market, we come in at 7. So that price pushed down, made these relative equal highs, and we're moving away. When I saw, I'm sorry, these relative equal lows. When I saw these relative equal lows was made and was price was moving away, that got me all excited, because when the highs or low are created and you see price move away from them, that is a good sign. And more it moves away, further it moves away from this relative equal highs, is greater your risk reward going to be. So I was all excited, seeing that price was moving and moving and moving away. But either way, when it was moving away, I didn't get any entry signal. This was I almost took a trade right here, but I waited for the entry signal here at this moment right here. When this relative equal lows were made, price push up and came back down, push up here on that candle, and then displaced through here. I almost took a trade here when price was retesting this, but I say I wanted to see a fair value gap made between here. So when price made this displacement candle, this red candle here, this displacement down through this fair value gap below this low, I was looking for a fair value gap before the entry. I wasn't going to take a retest of this F3G. So then I saw that price push down again. I was waiting for the fair value gap. Then I see price went up, and displaced. So I was still happy when I saw that price was displacing up, because I know the risk reward was going to be greater. But price just kept on going and going and going up. Then when price was around that area, I saw these relative equal highs was created here. So and then price moved away from it. When I saw that price move away from it, I said that these lows were going to be left behind for at least the market open at 9:30. So price moved away with this fair value gap, taking out these lows, taking out this low, and then started pushing up, close above this inverted fair value gap right here. And then when it came back down to retest, that is where I took my 10 contracts. Took my 10 contracts, targeted these highs. Then I when price closed above this high, I started trailing my stops. I'm going to put on the entry for you guys to see. My entry was somewhere about here on this retest of this inverted fair value gap. The target was about here. Target was about here. I should have put on more on this trader too as well, guys, but you know that the loss that I took, I just wanted to conserve the account. And yes, so that was 6 point, around 6 points stop targeting here. So when price took out these relative equal highs, this high, this high, took this out and close above, I started trailing my stops under under this candle until yes, around that area. I think I move up my stop a bit. I had 9 contracts trailing. Price took me out, took out the 9 here. That gave me about $300 and about $320 in profit. And then price move up, trail my stop below here. Price move up again, trail my stops below here. Then price move up. I think I trail my stop, yes, below this other block here. Then price came back down on this candle, took me out. If I just held for this, guys, I would have gotten a nice profit here, at least the 9 contract up that way. But I was just conserving, and I normally want to take a 1 to 2 and take partial and leave the rest running. So knowing that these relative equal lows that I showed you guys these relative equal lows that was made at around, let me see the time, 7:06 and 10 past 7, 10 past 7 and 7:06. These relative equal lows that were created, I was looking for these price to run down to these lows. So when I saw that price. Took out my last contract here. Hit this fair value gap here. This old 930 fair value gap at the top here. Push down here, then push up back. No, yes. So when price came close below this fair value gap, on the retest of this fair value gap right here, price traded back into this. I took, no, it wasn't here, that was the old one here. It was about that area here, this fair value gap, sorry. So when price came down, close here, no, it didn't close, price came down into this fair value gap, and on the retest of it here on this candle, I took 5 contract stops above here. Price went a bit in profit, and then price just reversed on me today, losing some of my profit, about $180 in profit here of mine. Was, so I normally take 2 trades. I was done, so I was just conserving the account today. And yes, I still happily to make roughly about 200 today, even though I was up about $320. So guys, the account is still alive, it's still up and running, hoping that I can still run it up and pass this account. What I want to do is stop over trading, take maximum 2 trades a day. I think if I take two trades a day, at least 2 trades a day, maximum, sorry, 2 trades a day, I can pass this account in flying colors. I still can pass this account. So this is the update. On Monday, I was able to make 572. On Tuesday, was able to make 462. On Wednesday, that was a big loss day I had. $1,096 was lost. On Thursday, I lost $412. And today, I was up 300 and about 20. Took a next trade, lost some of the profit. I'm up $196. So guys, thanks for watching this channel. Be sure to subscribe, comment, like the video. Peace out.